Everybody, welcome back to another webinar where I'm basically going to be doing the same thing as always, breaking down gold, GJ, US 30, and NAS, and then going over a little Q&A. So if we look at gold on the weekly time frame, because I know the majority of you guys weren't here for, I believe, Sunday's webinar or Monday's webinar. Gold actually is in a very bearish condition on this weekly time frame, and I actually do expect gold to possibly keep dropping as long as it maintains under this previous area of support. We have support throughout this entire range here, and if we look left, I mean, this area of support has literally been holding for years almost, since 2021, or we're about to get into 2023 in a few months. So we can easily say this area of support is held for years. And now that price is trading under this area of support, what was a previous area of support is now actually holding as resistance, where we're actually starting to see selling pressure come back into the market at this area here. So we can kind of expect gold to continue to drop from this area. Now, when we go to the daily time frame, what we have here is resistance all throughout the daily time frame at roughly 1677. But again, you have to keep in mind that this is an overall zone. It's pretty much this entire area right here where this is resistance and currently is actually holding as resistance. As you guys can see, for the last few trading days, we had this day, my bad. We had this day reject resistance and yesterday also reject resistance. Although this is a bearish engulfing or a bullish engulfing candlestick, price is still under resistance. And this isn't something I'd be too interested in buying unless price starts to trade above resistance. If we go to a 4-hour time frame, realistically, you could start looking for buys after a break above this area of resistance here. What you have to keep in mind as well is that the high of this kind of bearish trend that we have here is right here on this 4-hour high. This is the current high. So if price breaks above that point right there, then that's when I would actually start looking to buy. As long as price can maintain under this general zone here, I would continue to look to sell because again, if you look left, structure is always going to leave clues. This is still resistance here. And what I had pretty much spoken about, I don't remember when, it was a few days ago, is this is the area we would want to look to actually go short. And this is the area down here, this support level in this 4-hour time frame is where we would want to actually take profit at, right? If you're somebody that's looking to buy, the area to buy would be down here. If you're somebody that's looking to sell, the area to sell would be up here and not really try and take any positions in between. Because again, I give you guys the same example that I did last time. If price has an 80% chance to drop from this level and an 80% chance to drop or to buy from this level, but a 50% chance to go in either direction, why would you take any trade that's not at the 80% mark? It doesn't make sense. This is where the high probability trading mindset comes into play. You really only want to be taking certain positions at certain levels. Now, if you're looking to buy, again, what you can wait for is a break and then see if this area of previous resistance holds as support, where you could look to take price up. Now, if we ask ourselves, well, if price is going to go bullish, where could we possibly see price go bullish? And to me, that's going to be this range right here. That's going to be these previous 4-hour kind of lows here. We do have resistance at roughly 1690. Let's call it. Yeah, you could target 1690. Now, if price were to actually sell off, then you can actually look for price to come back down into roughly 1660. Now, GJ has been a little bit interesting because there's been a lot of consolidation around this 161 area, which I pretty much said as long as price can maintain above this area, you could look for buys. And although price did maintain above this area, it would have probably been a little bit more difficult for you to trade because this is a pretty clean and strong close under this entire area of support. I mean, this probably tricked a lot of people into looking like it was going to go into a short, which actually price pumped up higher and higher and higher, ultimately started to trade back above support. Once price started to trade back above support, sells are no longer an option because again, we're now back above support. And at that point in time, you could have possibly gone down to a lower time frame, look for some sort of buying opportunity, but realistically, like there was no real buying opportunity from when price actually broke back above support. It kind of just went straight through and broke back above these highs at 162. Now, if we look at it from a daily perspective, this is a very, very, very strong bullish engulfing candlestick with a lot of momentum. So at this point in time, you can kind of continue to expect GJ to go bullish. Now, when we look at market structure and the way things are actually forming right now, we actually have support throughout 162, call it 550, throughout this pretty much this entire range that we have here. This is all an area of support, and now price is trading above support. So as long as price can maintain above this 162, 500 area, I would continue to look to buy it. up into the next highs, which realistically, like you could probably look for GJ to come back up into 163, 500. You just got to be careful with these other structure areas because there could be a lot of indecision at these levels. So if GJ were to continue to go long, you could look for 163, 500. That would be the next area of structure I would be paying attention to on GJ. Other than that, if GJ starts to break under 162, 500, then you could possibly look to short it back down into 161. Thing is, though, if you guys do wait for the break and retest for shorts, then I would kind of be looking more. I don't know what the word would be. I would be looking to be taking my profit off the table a little bit quicker, just simply because there's a lot of bullish momentum on that previous daily candlestick. So I wouldn't really be looking to look for a home run trade other than just the fact I'm just looking to satisfy my risk to reward if you do take shorts on GJ downside. Now, give me 1 second here, actually. Right. So now, when it comes to NAS, US 30, right, there's been a lot of consolidation. This is the NASDAQ. If we look at the daily time frame, price is slowly starting to trade back under 10,848, which is a major area of support here on this daily time frame. And we could possibly see price continue to go down. Now that price is currently trading under the area of support on the daily time frame, realistically at this point in time, as long as price can continue to maintain under this area, we could look for it to continue to drop possibly down into these 4-hour lows over here being 10,700. And if price breaks that, then I would look for each whole number until price gets to about 10,500. That's kind of how I would play NAS. But at this point in time, there's like a lot of choppiness in the market. And really the only area I'd be interested in going short in is going to be this area here. If we look at this intraday time frame being the hour time frame, we could slowly see kind of like a descending wedge type of pattern forming, which typically that'll show us price break to the downside. If we look at the highs, the highs are actually getting lower and lower. So like I said, again, at this point, all I'm waiting for would be either a retest of this area or wait for a break of this area of support, a retest, and then for price to continue to go down. There's been a lot of consolidation, a lot of choppiness throughout this entire range here. So I would trade with caution. I wouldn't really go too heavy on position sizing, especially if there's a lot of news this week. And roughly the same thing goes for US 30. I would look for US 30 to continue to go down simply because if you go on the daily time frame, right, this is pretty much where the COVID highs are, and we have resistance at this range here. So if you look at US 30, what we could see is the daily time frame actually pulling back into this area of resistance being 29, call it 29,500, 29,476. And so far, price is continuing to reject that area. This is an area where I would continue to look to sell it every time price does come up into the area and sell it back down into these 4-hour lows, just simply because there's a lot of consolidation right now. And when price is consolidating a lot, I don't really like to look for really big targets, more or less so the nearest area of support or resistance. I mean, if we look at this move from here, we saw a rejection from here to here, and then price pulled all the way back up when you could have easily capitalized off of this move. So again, US 30 and the indices is another pair that I would be very, very quick to close my trade in profit, especially when you are in profit, and really just look to satisfy risk to reward, not really look for these big moves out of the market. I would just simply look to target each intraday level. Example, if price is at resistance and you see sells, target the next intraday level of support, which would be down here, possibly even down here, just because there's clearly a lot of indecision in this area as well. Now, I would only really look to buy US 30 when price can, or if price can actually break above 29,500. If we see a break above 29,500, then you can look to buy back up, possibly into 29,600, 29,700. Those would be the two areas that I would look to target on US 30. Now, we covered pretty much all the currencies that I trade, the commodities and indices. Anybody have any questions? Or does everybody kind of understand what I'd be looking for pretty well?
Yeah, you covered that well.
Cool.
Hey, bro, I have a question about when you enter on NAS.
Yeah.
So say if like you're like getting ready to enter, you're on the 15.5 in 1 minute. Say if you go down to the 1 minute when it's time to enter, but you already see that engulfing, what would you do?
Thing is, like, I don't always use the 1 minute time frame. It just also depends on my focus level as well, and if price is really, really choppy. Like, if price is really, really choppy, I'm not going to go down to the 1 minute. I'll most likely just maintain myself on the 15-minute time frame. Like, every day is very situational. There's not a lot of times I really go down to the 1 minute time frame. I will go down to the 5 minute time frame. But again, the concept is like all the same. If I'm seeing price reject resistance and maintaining under resistance, I'm going to look to sell, and in a situation where NAS is at this previous area of support, when I see all of this rejection, I'll simply look to sell it from this point to about this point right here. It's previous area of support. And sometimes it plays out very well. Sometimes it plays out where, price goes halfway down, then pulls all the way back up. I take it day by day, trade by trade. Every situation's very different. And I don't always enter exactly the same way when it comes to trading indices.
Okay, thank you.
Roll.
Yeah.
So you know how on indices, a lot on like the M15, M30, you're taking a lot of just the rejections.
Yeah.
When trading like gold and GJ, would you recommend doing that, or would you wait for the engulfing?
I mean, I would just kind of look at it from a bigger perspective, such as like a 30 time frame. I wouldn't really look to drop down to like the 15 or the 5 minute. Yeah, I would kind of maintain myself around the 30 minute and the hour time frame.
So if we got like a 30-minute rejection, would you wait for the engulfing then, or would you take it right off that on gold?
I'd probably take it right off that one go. I mean, it also depends on what the hour time frame looks like as well. Because if the frame also closes with the hour time frame, meaning you're closing at 9, 10, 11, 12, 1, 2, 3, right? Then I'll take the rejection. If the 30-minute, but the hour time frame is still fluctuating, I would probably wait for the hour time frame to stop fluctuating and see how the hour time frame closes and maybe enter off of the hour time frame close. Because what can happen is you can get like a nice clean sell signal on the 30-minute time frame, but the hour hasn't closed yet, and the hour fills that 30-minute wick plus more, then the trade wouldn't be valid. So it's best to wait for that closure around like 8, 9, every hour close basically.
Yeah, that makes sense.
Yeah, that's what I would do.
Bro, how you doing?
Yeah. Thanks.
Yo, Raul.
Yeah.
What's up, my boy? What's the highest time frame like you willing to take an entry off of?
I mean, it depends on the day, it depends on the trade, and it depends on what I'm trading. If I'm trading gold, I'm going to be looking for pretty significant size moves, which is not going to require me to enter a small time frame. But typically, like if I'm going to take a trade, the highest time frame I take an entry off of would be like the hour time frame.
But
yeah.
Hey, Ro, could you do like an example of like how you, as you said, if you'd enter on the 30, you'd wait till the hour is about to close. Like just one example of how we could enter better. Because I see myself like I enter on a 30, and if it's an engulfing, as you said, that if the hour is not in sync, I realize it just fills the wick and then it just goes up. And then I'm like, damn.
I mean, every situation is going to depend, like if we look at gold, like in this area here with these possible entries, any entry would have been pretty fine. But if you look at like the hour time frame here and we flip to the 30-minute time frame, right, what we could see obviously is that initially price came up into this area and kind of closed above this area of support or this area of resistance, but then you can also argue it's an entire zone and it closed with a rejection here. So personally, this isn't an entry that I may be too comfortable taking. Maybe it'd be different if it was like NAS or US 30, right? But then you wait the next 30 minutes for the hour time frame to actually big wick rejection such as this one. Then you also have another retest over here, and then see what that looks like on the 30-minute time frame. You go to a 30-minute time frame and you can see price coming up and rejecting. But notice also that this is 22:30. So this is a 30-minute rejection. It's not a 23, meaning the hour didn't close. So you can also wait and see how the hour closes, where you can then determine like, hey, the hour closed with, when this situation should be 23. The hour closed with a nice rejection and momentum was significantly slowing down. So I'm going to take my entry right off of this closure right here, because now we have 1, 2, 3 rejections of this area, and I'm going to take my trade right here. Versus somebody else would have been like, you know what, I'm going to take my trade right here, and that would have been just fine as well. But at the same time, you could have maybe squeezed out an extra 8 pips. But does 8 pips really matter all too much if you're stressing the entry too much? Because again, entries is a thing where you're never always going to be right on your first entry, or you may never always be right on your second or third entry, whatever the case might be, is right. You're going to find some entries that work out great in your favor and go straight into profit, but then you're going to find some entries that you're going to see drawdown. You may see a little drawdown, maybe decent amount of drawdown. You may see a lot of drawdown. Ultimately, that's not as important. What's more important is your stop loss placement, because it doesn't matter if you entered here, 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 or even right here. You all have a general entry zone of roughly 18 to 8 pips difference. I mean, depending on the type of trader, that could be a few $100 difference, that could be a few $1,000 difference, right? Ultimately, one trader may see drawdown, another trader may not see drawdown, but at the end of the day, you caught the move. What's more important is, did you place your stop loss in the right area? And in a situation like this, you want your stop loss to be above these highs, especially above this high, because that's the general median of the zone. Because you can have a trader that has an entry, I don't know, right here, and they place their stop right above that high and then get taken out here and take a loss. While this entry would have been way better than this entry here, this trader was the one that made the money simply because the stop loss was in a better place. That's what I would stress more, is where am I placing my stop loss versus how am I getting into the market? Because I could literally tell you, only take trades with candlesticks that look like, I don't know what the fuck just happened on my chart. Anybody help me out here? All right, only take trades with candlesticks that look exactly like this one, and people will still overcomplicate it. So the best thing to do is just find your general entry candlesticks, literally print them out and smack them onto a post-it note where you can see them on your monitor every single day. Because I'm very different than how you're going to take entry, right? I'm going to be able to identify entry candlesticks a lot better than maybe you, or vice versa. You may be able to identify entry candlesticks that I may not be able to identify. And just simply because of that, you may be able to catch more moves than me, or vice versa. I may be able to catch more moves than you. You have to identify what you can identify, and then again, just practice that, rinse and repeat. I'm just kind of here to give you the general foundation of how you should be entering the market, where you should place your stops. From there, you have to find what suits your own personality. Because like I said, again, I trade very aggressively. I don't care if I lose 2-3 positions, 2-3 trades in a row, as long as the next trade makes it back. While some other guys like, no, Raul, you're smoking crack. I would never like to lose 3 trades in a row. I would like to win 3 trades, only lose 1. 2 complete different ideologies, right? What's more important, that the both traders are profitable at the end of the day. So my best recommendation to you is not to stress that out too much. I've given you like a general understanding of how you should enter the market and what candlesticks look best to enter the market on. And then you just got to find what you can identify is your type of best entry. And depending on that type of entry will also depend on the risk. Because again, there's a lot of candlesticks where I may see a certain trade that looks like this. I may not enter such high risk compared to maybe a candlestick or an entry that looks like this. I may go lower on the entry just simply because the entry doesn't look like it's the best possible entry to take, versus like this is like a grade A candlestick entry signal for me, But my grade A entry candlestick could be your definition of a shit entry candlestick. So you just got to identify honestly what works best for you. I'm just kind of here to like give you guys the foundation of what has worked for me and how I do things,
Yeah, makes sense. Thanks, man.
Yeah. Now I don't know how to flip this back around.
Hey, Earl, I have a question on like identifying like a clean like break. Because sometimes like when I see like a prices at support and it breaks, I think I'd wait for the retest, but then price goes above that new resistance, and then I'm just confused on whether price actually broke or was it just forming a support that I didn't see.
That's where time frame correlation actually comes into play, because it's kind of like, it's almost like the same thing. Let's check GJ. It's almost like the same thing with GJ. I mean, you look at the hour time frame, it's clearly closed under. We can all easily identify that it's clearly closed under. But then you go to like a daily time frame, and that you can see prices close back above support. So we all know that although the previous day closed under support and it's breaking under support, the next day came back above and closed back above support. So realistically, support never really broke. Support held very well, simply because again, you have your touch, your gaps, and your overlaps, and that's going to happen in the market. If I were to look for another example, which let's call it to be gold, right? We look at the hour time frame. What did the previous hour look like? We had price close back above support, right? But then the next following hour, price closed right back under, showing us a rejection. In situations like You have to make the decision. Traders like, okay, well, I took a trade here, I got stopped out here. Now price is trading back under. Do I want to take that position again? And ultimately, that's a decision that you have to make. Sometimes it's going to look like that. Also, sometimes if you trade to a longer time frame, like let's grab this area right here, right? If you're on the 5 minute time frame and you see price trading back above support, right? That looks like a pretty clean break if you ask me. You know, if you stay glued to a 5 minute time frame and you don't flip through the time frames and you see the hour time, this is a clear as day projection. And that should tell you, okay, the higher time frames are telling me sell. I'm going to continue to look to sell because the higher time frames are always going to have more reliability compared to the lower time frames.
All right, appreciate it.
Question, yeah.
Hey, Raul, how's it going?
Yeah, bro.
I have a question. For those that pay for the yearly signal, and you mentioned earlier in the Instagram that you're gonna open indices signal room. Are you gonna move us the ones that we pay for the yearly?
Everybody in the yearly is going to maintain in that specific room until January. The room will be completely deleted.
What about the one the indices?
Well, indices is not as of right now. This is coming soon on the page.
It's gonna be separately.
No, it'll be in the same room.
But you're gonna move us for the ones that because in my case, New Year session will be fit better for me, and I don't know for.
No, I'm not going to move you guys. I'm going to keep you guys in the room. Whatever changes that we make in any other room will be affected into that room until obviously that room closes.
Gotcha, man. All right, man. Thank you.
Hey, yo, Raul. Yo, Raul.
Yeah, can you hear me?
Yeah, I can hear you.
Let's go, bro.
Yo, do you mind going over like why the sells off of 160-100 on GJ just clearly did not work?
I mean, that's just going to be times that it's going to happen. You're talking about like a retest?
Yeah, like right off the 4 hour, man. I was looking at the weekly and like obviously we're like, you know, pretty bearish, and like I saw that like weekly rejection. I thought we were gonna dump like back in the 150-800.
Well, I mean, obviously you got to also keep in mind, like, you got to think about what big banks are doing. Like, a lot of times when retest will work, there'll be a lot of times where it won't work. There's, I mean, so many like different perspectives, and if the big banks are take price long, they're going to need a lot of sellers to be able to even fill their position. So this is what they could possibly make bear traps, bull traps, whatever you kind of want to call it. I think you find them more in the stock market, but I feel like this was just a situation that it just simply didn't work out.
Right.
And that's going to happen. Not every trade is going to be in favor, but this is definitely one of those areas where, again, like if we look at the overall swing and the rejections of price, like it's a pretty big area.
Mm-hmm.
You know?
Yeah. I appreciate it, my man. Yeah, because I saw that weekly, and I was like, man, I saw the weekly, like it clearly like broke structure, and then I see this huge wick, and I'm like, I swear to God, that thing was about to dump back into like 158. But I appreciate you, though, my man.
Yeah, you know, I mean, the thing is, like, you got to remember, it's not always about the what, but it's about the way. And if you look at it, although, yeah, price had a big rejection weekly, it's still back above major, not even just like a minor area. It's back above major one support. I mean, look at how months prices rejected this one area, you know, so there's going to be a lot of decision making in this area. And to me, that's kind of what it looks like, just a clean, clear, like bear trap, kind of what it looks like to me. Or you could call it fake out. A lot of people call them fake outs. That's what happened, you know?
Mm-hmm. Yep. I appreciate you, though, my man.
Yeah, bro, problem. Anybody else?
Yo, Raul.
Yeah, let's go, bro.
Can you like explain, like in your own words, like in your opinion, how you think tomorrow's news are gonna affect the markets, like gold and NAS and the stock market in general?
What is it, CPI?
Yeah, core CPI news. Yeah, consumer price index. Yeah.
Well, if it's CPI, you have to find out what the expected rate of inflation is going to be.
Okay, and then if it's lower, that will then
bullish catalyst. So I'm going to give you guys random examples, random numbers. The way I would approach tomorrow is, let's say the CPI report is expected to come out at 0.5, right? Okay. But if it comes out at 0.75, then that shows us that inflation isn't slowing down to what was actually expected, right? Versus if it comes out, let's say the expected report is 0.5 and it comes out at 0.25, then that would be a bullish catalyst because inflation is simply slowing down.
Okay.
Versus
Okay.
from my personal experience looking at CPI, I mean, even if it were to come out as expected, that could possibly be bullish as well, because then it shows us that inflation is slowing down. It also depends on what the last CPI report was as well.
And since it's going to be at 8:30, will you still wait for the 9:30 open?
Say it again?
Since it's going to be at 8:30, will you still wait for the 9:30 open?
Oh no, if it's gonna be at 8:30, I'm on the markets cracked out of coffee at 8 in the morning. You know?
Raul, the last CPI was 0.1. So if it's 0.2, I guess bullish, right?
0.1, you mean as in like a whole percentage point or 0?
No, 0.1, yeah. 0.1.
What's this current expected CPI report to come out as?
0.2.
0.2.
0.2? Damn. Well, in that situation, I mean, it would have to come out higher for it to be bearish. You know?
Okay.
Hey, Raul, I don't know if it's me or you lagging.
I may be lagging. I don't know why my internet's acting up today.
Question: how do you process like a losing streak, like mentally?
You gotta look at your journal. Are you fucking up or is you just taking normal losses? Then from there, that'll depend on your question.
Take 2 days break.
I mean, everyone's gonna require a different break. You know, when I go into a losing streak, it also depends on the size of the losing streak. Like if I have an $100,000 account, I'm down $25,000. I have to see why I'm down 25K. Am I risking 10K a trade or am I risking $1,000 a trade? And did I just enter a really shitty losing streak, or what's causing me to be in this losing streak? This is why journaling is so important. This is why I've literally dedicated so much of my own time and money into building a trading journal, literally for this specific reason.
When are you going to open more spots in the journal?
I mean, at this point, we're ready for like a full launch. I'm not saying you guys got to go and get my journal specific. There's so many journals out there that you can look into. I don't want to be like, nah, you can only buy DTI, you know what I mean? Right? You can look into a million different other journals. I'm just, again, here telling you like journaling is the most important thing. You don't have to specifically get my journal. But you can look it out, check it out, et cetera, et cetera. But you can even be writing on a piece of paper. You can even be sending yourself smoke signals if that's what you want to do. Well, just journal. You know, you have to journal. You have to look at your statistics, and you'll pick up bad habits in your trading, and you'll be able to identify those bad habits in your trading. You need to be able to avoid those bad habits in your trading in the future to increase your profitability. If you could start eliminating as many mistakes as you possibly can from your trading, like if you see you have an over trading issue and you start eliminating over trading, you'll start seeing your profitability increase.
Yeah, journaling is absolutely everything you gotta do.
Literally, journaling is literally everything. And looking at your MetaTrader 4, MetaTrader 5 history is not journaling. I'll tell you that right now. Not journaling. You can't. That's the thing, though, too. You can't be lazy. You got to dedicate the time to really look at your journal and analyze yourself. You have to hold yourself accountable in this space. If you're just like a straight degenerate and you just love gambling in the markets and you're like, bro, I don't know why I keep blowing accounts. I could tell you why without even needing to tell you why, you know? Versus if you're somebody with a strict risk management system and you're just down 25%, then you have to analyze why. Are you taking 10 trades a day? Well, if you are, it's a no-brainer. You're overtrading. But these are all like the simplest things that I'm telling you that you won't realize because you're inside of your own little bubble. When somebody's outside of your bubble that's already been through it and looking into your bubble, I can almost automatically tell you where you're fucking up on. But when you're in your own bubble, it's hard to see where you're fucking up on at times. This is why you need to be able to have a journal where you can look at your own self from a third person perspective, if that kind of makes sense.
Raul?
Yeah.
When do you actually do your journal?
Well, my journal's automated, so I literally don't have to do anything. All I have to do is write down my notes on the trade. So typically what I'll do on a day-to-day basis when I am trading, because right now I'm not trading, is I'll plan out my trade. If gold breaks or whatever, let's go on gold. If gold breaks 1677, I'll wait for it.
I just want to say that.
Right. If gold breaks 1660, I'll wait for a retest to go short. If I followed my plan, then I followed my plan and I'm good. If I made money, great. If I didn't, it just so happened to be why I didn't make money. If it was a normal loss, it's a normal loss. And then I'll just kind of like have that off on the side. But everything else is automated. And then at the end of each day, I'll look at my trading day on my journal, not on my MetaTrader 5, and see where I did well versus where I did bad, and look to improve from there. If I saw that, hey, I went over my initial trading plan of taking 3 trades and I took a 4th trade because I was being greedy and I wanted to make my losses back and I incurred an extra loss, well, I know I broke my discipline.
Hey, Raul, how do you determine a reversal and a just a pullback? Because sometimes I think price is pulling back, but it's actually a reversal.
That's the thing about trading and trends. Typically, you won't identify reversal until it really happens, and you won't identify a pullback until price has already gone in the direction of the trend again. That's kind of where we as analysts need to make our decisions on, hey, where's the highest probability that we could see a reversal? Where's the highest probability that we could see a pullback end? And just make decisions from there. You're never always going to be 100% correct, right? So you have to see, hey, I'm good at guessing. I don't want to say guessing. I'm good at determining a continuation 70% of the time, and you adjust your risk management according to that 70% of the time.
Oh yeah, Rob, could you go to Nash real quick? Could you go to the 4-hour time frame? I just want to talk about like a sell I got in for real quick. I took shorts for I like the 10965 area, 109.
What?
I took sales at 10965. 10965.9, a little bit upper.
10965.
Yeah, and if you go in the 4-hour, it just broke that low and then came to retest, and then I targeted like 10833. And was that like an ideal trade?
You went short here.
Yeah, and target 10833 for like a 1-2, like 1 to 2 point something.
10833 right here.
Yeah, I had like an area there. Yeah. If you go to the 4-hour, it was just like it broke, came back to retest, and then that's when I got in, like right there to the left a little bit, one more. Yeah, you know how like it made support, broke, and then came back to retest. I took shorts from there. Would you consider that like an ideal trade?
Like right here?
Yeah.
I mean, I see why you took the trade. To be honest with you, I don't know if I'd be so comfortable taking a trade like that, because what I personally would have seen is we just rejected support. So let me wait and see what happens here.
Okay.
I would have seen things. But you made money. That's what's more important, I feel. You know, again, like me and you both have different eyes. You know, what's more important is that you're profitable at the end of the day. I could clearly see you caught a move from, call it what? Well, if you took that trade here, then you took the trade around here.
After that green candle right there. The green little pin bar.
Green?
I said blue to the right.
After here?
Yeah, after that pin bar right there. I had like the whole entire area.
That's a little bit different then. Yeah, I would have possibly looked at taking this position as well. What does a 15-minute look like here? Would be something here. Yeah. I believe I took a position around here. And you targeted here.
Yeah, that area, that whole entire area.
Yeah, I see. I can actually see very clearly why I took the trade. Yeah, that's fine.
Raul?
Yeah.
I am actually like struggling a little bit in identifying my measure areas, my measure support and resistance, or supply and demand versus the minor ones.
Well, your major areas you can easily identify based off of the daily time frame, versus your minor ones, you'll really see them on a 30-minute, 15-minute, 5-minute. You know, again, you just got to literally go back to the basics. What determines a major area of support? The type of reaction you get out of that area. Because if I draw a support here and a support here, and I tell you, hey, 2,800, we saw price go from 2,800 to 5,200. And then after that, it continued down. Versus, hey, if I tell you, hey, we saw price go from 6,200 or 6,000 to 6,100, then we saw price go down. What's more major?
The first one?
This one's
the second. No, the second.
This one's obviously more major. So that's how you identify your major areas versus your minor areas.
Thank you. Appreciate it.
Hey, Ro,
Got
do
a
you have
question.
any like grade A entry candlesticks for Nas?
I mean, bro, they're all the same thing. I wouldn't say like I would prefer one over the other. It just whatever's presented is whatever's presented. Like if I saw this candlestick at an area of resistance, this to me would be like my grade A entry if that's kind of what you're asking me right here.
Okay, yeah, that's what I was trying to say.
Literally, like this candlestick, and this candlestick wouldn't be like wow, you know, but it again, this would be another entry candlestick.
So it's just the ones with long wicks or rejection wicks.
Yeah, the ones with the biggest rejections, typically what I like to see the most.
Okay, thank you.
Do you wait for those to form on the 1 hour and then drop down to the 15-minute, or I'm sorry, vice versa, the 15-minute first, and then kind of like take a step back to see if there's a confluence on 1 hour as well?
It depends on because realistically a lot of the times like what can happen, especially with these crazy volatile pairs, is that you're gonna try and see buyers or sellers break that area, right? And then a lot of the times what's gonna happen is it will look like it's gonna break that area, but then reject on a higher time frame. So it also depends on the day as well, and what times I'm trading. Typically if I'm trading like, and it also depends on what the previous candlesticks closed on before. Typically, the best thing to wait for is like a 30-minute rejection. That's kind of what I like to wait for. If I see a 30-minute rejection, like here, for example, I mean, just kind of look at this from like a live perspective. Let's say I were to take a short here, right, for whatever reason, right? At one point in time, this candlestick looked like it was breaking above, but then closed right under, right? So if you go down to like a 5-minute time frame, which if I do go to a 5-minute time frame, I don't know if it'll, yeah, sure, let me. It's going to definitely look like price was breaking above that area, right? And a lot of the time where you see breakout traders like get faked out if they don't close within the time before price continues to go down, you know? So really like to me, the best thing to do, what I've seen the best thing to do in my trading, no matter how aggressive I'm trading, would be to look for like that 30-minute, 15-minute closure. You can also wait for the hour if you want to be safer, but to me, it just depends on where I'm also trading at also. A lot of the times, like, when I'm trading at more of a major area, I'll wait for the hour, the 30-minute rejection first. Sometimes that'll work out well in my favor. Sometimes it won't, you know?
Yo, Ro.
I appreciate it. Thank you.
Yeah.
I have a question.
Yeah.
Do you usually trade with the news or no?
I've traded news a few times. But what do you mean trade with the news?
Do you usually like counter trend that, or do you like just wait till like the news is expected and you just like jump in right away?
I wait till what the news is expected and then I jump in. But like if I see the news come out to be, let's say, bullish and it's going bearish, I'll wait for it to start going bullish and then is when I'll kind of jump in. You know, I've tried different things such as like kind of like almost kind of like dollar cost averaging or scaling into a position while price is going against me, right? And I typically see more drawdown that way than waiting for price to kind of like bottom out. Like again, and this is if the news report came out bullish, right? I'll typically like what worked best for me was wait for price to bottom out, start rejecting, and then going down to a really small time frame to look for price to go in my favor, then start buying and start averaging into a position.
Gotcha.
Yeah. Everyone's gonna do it very differently though. You know, you just gotta find what works best for you.
So basically you like counter trend? Like you just wait till it bottoms out, you counter trend before like it flips on you?
Like if the news was bullish.
Okay.
If the news was bearish, then, and if the news was bearish and I see price going bullish, right? It's always very sketchy to obviously go against what price is doing. So I try and always wait for it to kind of like reach a top, if that kind of makes sense. But then trying to pick tops and bottoms, you have a high probability of losing money. So it's always best to wait for price to go in your favor and then look to enter there, especially when it comes to like news events. Because what can happen a lot of the times in news events is like, you know, if price is trading here and let's say the news came out to be bearish and you see it go bullish very quickly, you just start selling. You don't know when this is going to end, right? Because it can end all the way here and then go bearish, or it could literally just go straight bearish. Like it just depends on the news event, you know?
Gotcha. Thank you.
Yeah, I don't have a crazy ton of experience trading news. I've always been the one to say, no, you're trading news, you're a gambler, you're a degenerate, you're gonna blow your account, don't do it. Just recently, now that I'm understanding certain news events more is when I'll trade them. I definitely won't trade news events that I don't understand though. I'll let the market do its thing.
Gotcha.
Did
Yo,
I hear
Raul,
correctly? There's not signals coming or no?
I'm trying to plan it out. I'm trying to plan it out and see how that would work.
Awesome.
yo, Raul, how do you trade when price isn't around a major supply demand zone? Do you look for like smaller time frame setups to take when like price is in the middle of zones?
I'll trade intraday setups. So example, like this was a setup that I had taken the other day where we see there's resistance here, support here. I don't remember exactly how I had it marked off. But what I do remember was that it was an intraday setup, and I ended up taking a position based off this intraday setup as well because I missed this one, or else I would have taken this one as well. You know,
What qualifies as an intraday setup?
intraday setup is just your levels on the hour time frame. All of this is still market structure, right? All of this is still market structure. So once I made the determination that price had broken under my area of support, which I think I had like roughly like around here, right? Once it broke under and I saw two rejections on a 5 minute time frame, I just literally followed my plan as I normally would. Took the sell back down to the major area, which is 11,100. Didn't close at 11,100, I closed before, but you get the overall point, right?
Yeah. So an intraday level is like not a daily or 4 hour level, but more of a hourly 30-minute level.
Yep.
Thanks.
Raul,
Yeah.
do you always do markups on your chart? Like, do you always change them, modify them on the day-to-day basis? Or like, do you keep them and not change them?
I keep my major ones. The intraday ones I may always be adding or deleting.
Yeah, thank you.
Raul,
Yeah.
for the CPI news last release, did you trade it? Because I remember that the first 5 minutes it was already down like 700 points on US 30. How would you trade that? Because it kept going down like another 800 points, but you really never know. Like there was no retest or anything like that.
I wouldn't trade them.
Okay.
Yeah, if you don't get into the news event before it's or when it starts and you don't get like a good entry, I would simply stay away.
All right, thank you.
Hey, Ro. For Nas, when it comes down to intraday setups, well, intraday support and resistance, which ones do you like? Like, what time frame do you like have no respect for, as in it normally just breaks through, or which one do you have the respect for, where you know it may reject and you can take an entry?
Pretty much all of like the hour time frame, 30-minute time frames are the ones that I'm looking out for intraday. And then I'll trade those levels based off like a 5 or a 15 minute.
Okay, thank you.
So when you get around a daily or a 4 hour, that just makes the probability like that much better.
It depends because like you can look at it like, hey, we're a major daily support. You know, I'm gonna look to buy it, but if you don't use like time frame correlation and everything else in congruence with what you're looking at, then you can get faked out a lot of the time just by buying and selling at these areas. You know, you got to use the trend and everything into consideration as well. If that answers your question.
Oh yeah, Raul, I got a question real quick.
Yeah.
Could you go to NAS? Could you go to October 6th? It's like up there on the 4 hour. Yeah, would you classify that like a on the 4 hour? Would you classify that as like a head and shoulders? Because like on the 4 hour, it wasn't really that clear to me.
I didn't see it that way.
Yeah.
4 hour?
Yeah, it wasn't really that clear to me. Because I was waiting for like price after they gave us that bearish, the next day gave us that bearish engulfing that medium probability. I was expecting price to like go up and make head and shoulders.
I don't think I would classify it as a head and shoulders. If price came up and did this, then I would.
Yeah, that was what I was looking for too.
Yeah.
Raul,
Yeah.
do you use indicators so far?
What?
Do you use indicators on your chart?
No.
Fibs?
I don't know what the fuck just happened to my moving average, but that's the only one I normally have. I have to delete it and re-add it.
Yo, Raul, when
Do
is
you use
your
Fibonacci?
trading journal gonna be like available to everybody?
Most likely this month.
Are
And
you gonna
is
have?
it phone compatible?
Oh yeah, 100%.
Are you gonna have like
And how's
screenshots of the charts?
Yeah, all that.
and how's gonna be the cost, bro?
What?
My bad.
The cost? How much is going to be?
$50. So $50.
$50 a month?
Yeah, $50 subscription.
Awesome. Thank you.
This is just the first version of the journal. Later on, there's going to be so many more things implemented. You'll even be able to backtest on the journal itself. This is
Awesome.
V1. But yeah.
Raul, you know how you spoke about trading the intraday levels off like the 5 minute, especially of NAS?
Yeah.
Would you trade like the 1 hour levels off the 5 and 15 on GJ and gold?
Thing is, my approach would be a little bit different because, like, I would probably mainly look at the 4 hour levels.
Okay.
I would take more like a swing approach.
Yeah. All right.
But yeah.
Raul?
Yeah.
How much your SVJ worth right now?
Right now, as we speak, I don't know. That's a good question. One of my friends had asked me that today. I bought it for 900 and I got a discount. I bought it for 1,000. I don't know how much it's worth. That's a good question. Let me see. Did they drop in price? They should be increasing in price because Lamborghini already said naturally aspirated motors, no more. So from here, it should just be literally to the moon. That's how you want to say it.
Man, I went to a dealership in Chicago and they have a Lamborghini SVJ for 1.2 million. And it's a really amazing car, man. It's the first time I try it.
Let me see. I'm trying to find one that looks similar to mine, that has a similar mileage, et cetera, et cetera. Like 2019s are a little bit cheaper. I have a 2021. I mean, that's kind of like a different question because it also depends on the spec of the car and everything else. It's I mean, there's one for sale here, 2020 with 2,000 miles. Mine has 1,700 miles, going for 1,100,000. So I mean, probably went up in price. Most likely went up in price.
The one I saw, it has 3,000 miles.
Yeah, mine has 1,800 miles. Yeah. Which